Okay, for this video, I wanted to cover Form 5472 filings for domestic corporations. So I've got two slides in front of us here with some background info and then the fact pattern we'll be looking at. And then I've also got a sample 1120 here. This is a U.S. corporate tax return, and it's going to have a 5472 included because we have foreign ownership. So if we start with the slide here, some background details on the filing itself. So Form 5472 is titled Information Return of a 25% Foreign-Owned U.S. Corporation or a foreign corp that's engaged in U.S. trade or business and has that same foreign ownership element. So there's really three scenarios where you're going to be filing this form. So the one that we're going to look at today is when we have a U.S. domestic corp has 25% foreign ownership. And by 25% foreign ownership, what we mean is at least one shareholder is a foreign person or entity, and they own 25% or more of the corporation. This can be kind of misleading because a lot of people will think that, well, what if you have 100 shareholders and each person owns 1% and they're all foreign? That's more than 25%, right? Well, no, right? Because you need to have a single person or a single corporation that owns at least 25% of the stock. If you've got 100 shareholders, all foreign, they're all unrelated, and each person owns 1%, yes, you arguably have a corporation here that is owned more than 25% by foreign persons. But because the ownership is so diverse, you don't have one person that owns at least 25%. So under those circumstances, you might not have to file this 5472. The second one here is foreign corporation that's engaged in a U.S. trade or business and has that 25% foreign element. So this would be a foreign corporation that needs to file an 1120F. And if they meet that 25% foreign ownership element, then we'll do the 5472 with the 1120F filing. And then the last one, this is a new reporting element that happened in the last few years. 2018 was the first year this was required, if I remember correctly. This is where you have single-member LLCs that are disregarded entities. And so these entities have to file a 5472 with a pro forma 1120. I do have a separate video on those types of filings. I'll put a link below if you find that you're in this camp as far as what needs to be filed and not necessarily the domestic corporation one that we're going to be looking at. Okay, so now who's a foreign person for U.S. tax purposes? These are foreign individuals, foreign corps, foreign partnerships, and I don't have it listed here, but foreign trusts in certain cases could also be a foreign person. So foreign individuals, this is anybody that's really not a U.S. tax resident. So U.S. tax residents are U.S. citizens, and U.S. citizens are always tax residents regardless of where they live, right? So if you have a U.S. citizen that's an expat living abroad, there's still going to be a U.S. person for purposes of these rules, so you wouldn't need the 5472. U.S. green card holders, or then any other individual that is physically in the U.S. enough days to meet that substantial presence test. Okay, so what information is disclosed on the 5472? Well, amongst other things, the main elements are we need names and addresses of who the shareholders are, country of citizenship and residency, or if this is a foreign corporation or partnership, you need country of formation, right? So under what laws was the entity created? We have to disclose the monetary transactions between the corporation and the shareholder, if any. There are certain cases where you might not have any money moving between the parties, and that's okay. We still recommend filing the 5472. You just might not have any information that's disclosed regarding those elements. And any non-monetary transactions that might apply, right? So in certain cases, you might have foreign shareholders acting on behalf of the corporation, but maybe they're not compensated for it. So that would be a non-monetary transaction. And then we have cost-sharing arrangements. So CSAs, it's not going to be in scope for our fact pattern when we get to the next slide. But CSAs are effectively the U.S. corporation and a foreign affiliated entity decide to enter an arrangement where they're going to develop a product or a service. A lot of times it's intellectual property. And they enter into this CSA where they're going to share the costs of development and then they're each going to sell and market the product in their respective jurisdictions and then split the revenues. So that's a case where you might have a CSA. In our fact pattern, we're not going to have that, so that'll be just no answers. And in most cases, that is the case. Very rarely do I actually see CSAs in place. A lot of times it's just an individual owner that owns the stock, and there's nothing like that going on. Okay, so what about de minimis exceptions? I get this question a lot. Because people are reading the instructions, but they're not reading them carefully enough, right? So there are de minimis exceptions. The requirement to file this 5472, we find the language in Treasury Reg Section 1.6038 Cap A-2. Okay, so that's where if you were to Google search that, you would find all the requirements to file 5472 and what scenarios you need to do it and what scenarios you don't. There is an exception for small corporations, for entities that have under 10 million in gross receipts. However, this small corporation exception does not exempt you from 6038A-2. Okay, so if you find yourself and you're a small company and you're under this 10 mil, you're not subject to the record keeping requirements under 6038A-3 or 6038A-5, right? So 6038A-3 is additional record keeping requirements, and 6038A-5 has to do with appointing the domestic corporation as your agent for that foreign affiliate. And so again, so in this case, if you find that you're a small corporation, you still have to do the 5472, right? So 6038A-2 still applies, but you can get out of certain types of other requirements that are only going to apply to the much larger companies, okay? Okay, so let's go on to the next slide here. Let's look at our fact pattern, and then we'll look at the tax return. So we have our foreign person here, Hans, non-resident. Non-resident is his last name in this case. So Hans, non-resident. He's a Cayman Island citizen and tax resident, so he lives and works there. And he decides to form a Delaware corporation in 2021, and he's going to own 100% of the stock. So he sets this thing up in May 2021, owns 100% of the stock. The company is going to provide marketing, consulting services to customers in the U.S. However, Hans is going to live and work remotely from Cayman. He's not going to come to the U.S. at all, so he doesn't need any type of work permit or visa because he's doing everything remotely from outside the country. So the company then hires some employees that are all working remotely, so they don't have any per se physical offices in the U.S., right? They've got maybe a mail forwarding set up, but everybody just works from home. So Hans is drawing a salary as the CEO, which is fine. He's permitted to do that, and he's paying himself $65,000 a year. And then during the year, in addition to the capital contribution he made for the stock, he also loaned the company some additional cash, right? He loaned him $45,000. And then outside of that, there's going to be no other related party transactions. And so we'll see on the return where we report these specific numbers. Now, in addition to filing the 1120, I've listed some of the other forms here that generally would be required. However, I'm not going to go into all these in detail, right? We're just focusing on the 5472 here. But the 5472 obviously is necessary because we have greater than 25% foreign shareholder. Schedule N can be included. This is where you disclose foreign ops of U.S. corporations. So if you have a foreign branch or you own foreign entities, foreign subsidiaries, or you just simply conduct business in other countries, even to the extent where it might not give rise to a foreign branch level. We're going to take the position that he does have a foreign branch in Cayman, and that's because of his physical presence. So we would include a Form 8858. Schedule G is going to be required because of the stock ownership requirements. So Schedule G, if you have individuals, so natural persons as shareholders or other companies that own a certain percentage or more of the stock, they should be separately stated on a Schedule G. So we'll skim over that. And then Form 1125E, where we disclose compensation of officers in cases where the corporation has greater than $500,000 in gross receipts. And so in our fact pattern, we are going to be in that category, and so we're going to need the 1125E. And then because it's a first-year corporation, we would attach a Section 351 statement for the transfer of cash by Hans to the company in exchange for the stock. Okay, so now let's go to the return and we'll walk through those various pages. So the 1120, you prepare it very much like you would if it was just owned by U.S. persons, right? So we have, this is page 1, so we have the company name, address, EIN, initial year return, right? Because this was incorporated May 15th, 2021. And then we have the gross receipts numbers, income and expense, all these items. I won't go into too much detail on all this, right? I'm assuming if you're watching this video, you probably already know how to do the 1120 and you've done all those additional, you've done everything required. You're just trying to figure out what we need to do next for the 5472 disclosures. So Schedule K down here is a good place to start. So this Schedule K includes information about the company, right? Mainly additional disclosures. So in question 4B, right here, we're answering yes because we have an individual that owns directly 20% or more of the company. So we check yes and we attach a Schedule G. And then down here in question 7, it asks us, did any foreign person own directly or indirectly at least 25% of the total voting power of all classes of stock or the value? In this case, yes, right? So we have Hans here, he owns 100% of the company. And his country of citizenship and residency is the Cayman Islands. And the note here, as a reminder, right, it's letting us know, hey, 7C, the corporation may have to file 5472. And if so, enter the number of 5472s attached. So we have 1. Okay. Question 10, number of shareholders, 1. Because we have less than 100, we have to disclose that number. And then the remaining of these Schedule K questions, pretty straightforward. None of these unique things apply, right? We didn't have a 351 transfer over $1 million bucks, no listed transaction disclosures or anything like that. No QOF disclosures, right? None of this. All no's for that, right? Keeping it simple. And the other thing I would note is we didn't distribute any dividends. So remember during the fact pattern, we didn't distribute any dividends to Hans. And so question 19 here, we're answering no because no dividend distributions were made that were subject to withholding. If you distribute dividends to a non-resident, remember, very, very important, that's U.S. source dividend income. It's subject to withholding taxes. It's U.S. source FDAP income. And so you would have to report the distribution and the withholding tax and file these 1042s and 1042Ss, okay? But in our case, again, no dividend distributions, so we're answering no. Okay, so next page, we have the balance sheet there. Again, a relatively clean, simple balance sheet. We just have some cash. On line 19 here, we can see we've disclosed the loan from the shareholder. Recall that Hans loaned $45,000 of cash to the company. It's just additional working capital. And if we go down, Schedule N, there's the foreign operations disclosure. I'm going to skip through that quickly. Schedule G, Part 2, we've listed Hans there as an owner, right? Directly 20% or more. So we have his name, his ID number. He doesn't have an ITIN or Social Security, so foreign U.S. is sufficient. Country of citizenship and the amount of stock he owns. And then 1125E, we're disclosing his ownership interests and time spent with the company and then his compensation. And that's because the company did over $500,000 in gross sales. Okay, so now the fun part, the 5472 here. Okay, so 5472, there's a couple of parts. First part, we're reporting information on the corporation itself, so it might seem duplicative because it's going along with this return. So, but you still have to restate it, right? So we have the corporation here, name, address, EIN, the principal business activity of the company's marketing services, and we're filing 15472 for the year. So in 1G, we're entering 1. Now, total assets are going to be total assets of the reporting corporation. So this number you can find on your balance sheet, obviously, or it's even disclosed again on page 1, 1120. Principal business activity code and activity, so we're in the marketing space. Now, 1F and 1H, you note the $110,000 here. We'll come back to this. This is the total value of this gross payments that we're going to find on Part 4. So when we go to Part 4, you'll see where we're pulling those numbers from. 1J, this is the first year that we're filing, right? So we've indicated yes, a check mark there. Total numbers of Part 8 being attached, we just have one, and again, Part 8 we'll touch on later. What has to be disclosed for foreign related parties and other information there, and the country of incorporation of the entity, right? So this is a U.S. domestic entity, so we're putting in U.S. Remember, you can have reporting corporations that are foreign, right? So if we have a foreign corporation engaged in trade or business, it might not be, it wouldn't be a U.S. company, right? It might be set up in another foreign jurisdiction, and so you would enter the country where the entity was formed. Date of incorporation, 1N, countries under whose laws the reporting corp files an income tax return as a resident. This is a domestic corporation, so it is a U.S. tax resident at all times. It's possible, certainly, to have U.S. companies that are engaged in business in other jurisdictions to such an extent where they are a resident there as well. So you could have multiple countries here. We are conducting business in the U.S. and the Cayman Islands, given Hans's physical presence there. Question 2 is asking us if any foreign person owned at least 50% of the voter value. Yes, right, Hans owns 100%. Now, box 3 is left blank here in this context because box 3 is used when you are filing 5472 for a foreign-owned U.S. disregarded entity. So if you have a foreign-owned U.S. DE and you're filing this 5472 with a pro forma 1120, then you would check this box, right? Okay, so part 2, information on the foreign shareholders. In our case here, Hans is the only shareholder, right? So that's why we can see here that he's the only person being listed. He's the direct 25% or greater foreign shareholder. ID number. Reference ID number, this can be anything you want. In cases where you don't have a U.S. ID number, you have to put a reference ID number. So the reference ID number, we're just using his first, last name, 123. Keep using the same reference ID number for all subsequent years. That's what the IRS likes to see. And so they could better trace what information is being reported for the shareholders. Okay. Now, principal countries where business is conducted. So from Hans's perspective, it's Cayman Islands. He's a citizen of Cayman, and he is a resident for income tax purposes there. Although Cayman doesn't actually impose any income tax purposes or income tax rather on its residents, but nevertheless, he still is technically a tax resident there, even though the rate is 0. Now, if you have multiple shareholders, so let's say Hans owned 50%, and then his friend Mark was also a Cayman Islands resident, and Mark owned the 50%. We have Hans's information here and Mark's information as well, right? So list all of the direct 25% foreign shareholders. Now, Part 3 covers related party information. So related parties to the reporting corporation can be the shareholder itself, right? And so that's our case here. We've checked 25% foreign shareholder. The related party also could be an individual or a company that's related to the shareholder, right? So if we look at the attribution rules, if Hans had a separate company that he owned, then we could argue that, well, that company is related to the 25% foreign shareholder, and there's commerce going on between that other company and this U.S. domestic corp. Or we have a simple relationship where we have another company that is simply related to the reporting corporation itself. So in this case, we've got Hans here. He's the foreign shareholder. That's a related party because there are transactions occurring between the two of them. And so we've entered his name here. And then Part 4 is where we list all of those monetary transactions that are occurring between this related party and the reporting corp. So Part 4, you can see here, it's titled Monetary Transactions between the reporting corp and foreign related party. Part 4 must be completed if the foreign person box is checked in Part 3. So right up here, we've indicated that the related party is a foreign person, so we've got to complete Part 4. Now, Part 4, line items 9 through 22, these are monetary transactions where money is coming into the corporation, right? So the corporation is receiving loans from the related party, or the corporation is receiving interest or the corporation is receiving rents from the related party, so it's inflows into the company. The second section down here, 23 to 35, these are outflows from the corporation. So if the corporation is paying money to the related party, those values would be reported here. And so we could see here on line 17, amounts borrowed, the reporting corporation is borrowing money from the shareholder, and the balance at the end of the year was $45,000. And the reporting corporation paid a salary to the foreign related party of $65,000. Okay, so that's why those numbers are being disclosed there. For the loan balances, note that the beginning balance is zero, and this is because the company was set up in the current year. Obviously, if this was a year two disclosure, we would have beginning and perhaps also another ending balance, but in this case, beginning balances are zero. Now, part 5, this is blank, very similar to that question on page 1. This is included if we're filing it for a foreign-owned U.S. disregarded entity. In this case, this is not a foreign-owned U.S. disregarded entity. This is a foreign-owned regarded entity, so it's a U.S. domestic corporation, so we're leaving this blank. Part 6 is asking for any kind of non-monetary and less than full consideration transactions. We check yes here and add a statement 6 that just highlights that the related party here is an officer and director of the company, right? So they're an officer and director of the company, so there's perhaps times where they are doing something on behalf of the company where, you know, it's either non-monetary or they're not getting paid full consideration for that. And so we just want to disclose that to make it very clear that Hans is not merely just a passive shareholder, right? He's actively engaged in the business operations, okay? Now, part 7 here, additional information, and then part 8. Recall that part 8, these are the cost sharing arrangements here. Remember, we don't have any in this fact pattern, so we just answered no. Part 8, most of these are no, well, all these are no in this case, and that's the case with most companies. Right, so obviously just answer yes or no depending on your circumstances, right? So if you did import goods from a foreign related party, yes, and then disclose, you know, the basis or inventory cost issues. Is the corporation a participant in a CSA? No, right? Did they accrue any interest or royalties for which deductions are limited or not allowed under 267 Cap A? No. No FDII deduction, none of that. So no's across the board there. Obviously read each question very carefully and see if they apply to you because you certainly don't want to miss something. But in our fact pattern, pretty straightforward, right? None of these apply, so that's why it's all no. Okay. Part 10 there, or sorry, part 9, the BEPS, right? So base erosion. Section 59A, this is going to apply to just really, really big companies, right? The threshold is 500 million in receipts or more. Our little company of 500,000 falls well below that, so we don't have any kind of BEPS issues. Okay, and that covers it, right? So this is just more supporting statements on, details on the expenses and everything. But as far as the 5472 goes, that's largely it, right? I mean, very important to just make sure that you include this because failing to include it is $10,000 penalty, right? So you certainly don't want to miss it. Oh, sorry. Let me touch on the 1F and 1H again. So they do ask here, again, disclose the total value of the gross payments made. All right, so you can see 110 there. That is a total of everything here in part 4, right? So 45,000, 65,000, add those two up. So just add lines 22 and 36, and then you'll get the gross payments made that can be disclosed here in 1F and 1H. Notice here that this is the amount on this 5472, right? 1F asks for made or received reported on this Form 5472. If you were filing multiple 5472s with the same return, then they would ask that you consolidate all of the amounts and then put the total there, right? So if you had, 3 5472s and then the total value of gross payments made or received across all, if you total up all the line or the box 1F amounts. Okay, so that's what they're asking for there. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, obviously, please feel free to leave me a comment below. Happy to answer any I can. And I look forward to seeing you again on the next tutorial. Thank you.